So this is when we position ourselves right on the wick right here of this 4-hour candle, what you need to look for and how those really high probability entries happen. So this one is probably one of the most important videos regarding the whole alignment. What comes to the lower timeframes and execution timeframes, I'm using this type of formations very often in my trading. A lot of the time, everything aligns exactly like that. So I thought I will make a full breakdown what comes to this whole alignment regarding the lower timeframes, execution timeframes. In this video, particularly, we are not talking about daily timeframe. We will assume that we are having clear one-sided order flow. We have a clear daily stage and we have a clear jump on liquidity for that day. So what we have here on the left is lower time frame development. So that's usually anything between 4 hours and 15 minutes, but most commonly it's either 1 hour or 15 minutes. So now what we have here is a simple clear order flow, and our main focus goes to this specific development from this point to this point to this point right here. So how this whole pullback and another impulse takes place, price attacking the external buy side liquidity right here. Where it pulls back, when it stops pulling back, what takes place on the execution timeframes, and what is taking place what comes to the 4-hour candle stage. Obviously, if this is a bigger development, and let's say this is not 1 hour or 15 minutes, but a 4-hour development, this is obviously when this goes out the window, and this is very most commonly focused not on the 4-hour development stages, but the daily candle development stages. But the most common type of developments, again, usually take place on the 1 hour and 15 minute. This is where we pay attention to the 4-hour development, when here sometimes it will be one candle, sometimes it will be a couple candles. In this case right here, we are talking about one candle stages, all of these three being one candle right here. So stage 1, price pulling back into bullish Peter race. Stage 2, price is starting to push higher, giving all the shifts in delivery right here. And stage 3, price eventually fully taking out the original consolidation, but we will come to that a bit later on. So now a lot of traders are asking where the actual clear buy models, sell models take place. This is when I want to mention few important parts right away. This is when we have a daily stage. Let's say we open expecting for a bullish day to happen. So this is the first part. Second part is draw on liquidity. Do we have a clear draw on liquidity? If we have that, let's say this is our clear draw on liquidity right here. Price is pushing towards the magnet area. And after the open, we start seeing price pull back into bullish Peter race and start pushing to the upside. So this is another major part regarding this whole formation. And lastly is the lower time frame order flow. Do we have that or not? Then we have all of them. That's just perfect. If you don't have daily stage, and let's say we have a neutral daily stage, but very clear, drawn liquidity and lower time frame order flow, that's still okay. But obviously we want to see absolute perfection regarding this whole alignment from lower time frames to execution time frames to the 4-hour development. So now a lot of traders very overcomplicate what is a market maker model. They start focusing on some specific science, some specific wizardry and stuff like that. Then in reality, when we have a clear lower time frame order flow that's pushing towards a main draw on liquidity, the market maker model fractals are born in these type of healthy lower time frame pullbacks. And what I'm talking about in this case, let's say price starts pulling back, it runs some sell side liquidity right here. And let's say in this area particularly, what we have is a bullish order block. So let's draw that. Let's say we have bullish order block overlapping bullish fair value gap. So in this area, you're basically focusing on clear bullish Peter race. So when we have that clear draw on liquidity right here, the first thing that we start focusing on, if the time of the day is right here, and let's say it's either London kill zone, ideally of course London kill zone forming a low of the day, but it can be also a New York kill zone if it is a New York reversal type of a development. This is then we want to see time of the day on our side right here. Then price in this pullback from point A to point B right here, when it's leaving low resistance buy side liquidity signs. And what I'm talking about are these round formations, round trend line-ish type of developments, when we don't see any sharp spikes to the upside right here running buy side liquidity before dropping lower. This is ideal. We want to see those round formations, low resistance signs. That is a perfect development. What comes to the sell side of the curve of a potential market maker buy model fractal, what comes to the execution time frame specifically right here. So one pullback here on the lower time frames from point A to point B to point C back again, taking out point A. This is our whole execution time frame market maker model. This being the point A right here, this being the point B, and this being the point C right here. So inside of this triangle type of a formation, what comes to the lower timeframes, here on execution timeframes, this is when we come to a full market maker model fractal, and this is where our actual long opportunities are born right here, pushing towards the external liquidity, which is this original consolidation. And original consolidation is the point A, the area that creates and starts the pullback towards point B, and point C, expansion C, takes out the original consolidation right here. Sometimes it is actual consolidation, like a proper buy-side liquidity pool, and sometimes it is just a simple type of a high. So a lot of traders confuse these parts as well. Remember that original consolidation can be a simple high, a simple structure, as well as a proper buy-side liquidity pool, proper sideways range consolidation type of a thing. So now that we have this out of the way, we can instantly mark this level right here as original consolidation. So now I connected these two situations, again, this being something around 1 hour, 15-minute type of formation, this being execution timeframes, usually something in the middle between 1 minute to 5 minutes, this high being the same high right here, this whole pullback being this whole development, but from execution timeframe point of view, price bottoming out in a key area, ideally running some tiny sell side liquidity in this initial leg right here before the bullish P array formed, price creates this point B right here in the bullish lower timeframe and starts shifting higher ideally during specific time of the day. So one of the high volume type of windows, either London kill zone or near kill zone. One thing that it's crucial to have is a very clear catalyst area. And what I'm talking about, catalyst area is a lower time frame. Again, something right here. Bullish P arrays, sometimes we have even few P arrays overlapping in that specific area, like fair value gap, order block, breaker block, and all of that. When we identify that area and price starts pulling back towards it, we are not really looking for anything in this type of situation. We are not looking for shorts. We are not looking for any of those high-risk scalps trading towards this catalyst area right here. Obviously, you can do that, but when we have very clear general liquidity hiding right above, when we have clear bullish order flow and stuff like that, this is only just simply not worth the risk trading towards the catalyst area, simply because you never know if price is going to just tag this area right here, leave SMT between these structures with the XI, let's say, if you're trading euro, and it just blast with the main order flow towards the main jar liquidity. This is why it's crucial to pay attention to the whole picture and not be so focused trading towards the key area. Why we have this catalyst area is because we want to see price give a shift in delivery what comes to execution timeframes inside of this lower timeframe P array. And sometimes, again, it's one P array, sometimes we have few P arrays. So one thing I want to highlight right away is that price is fractal. And what I mean by that is that if, let's say, this is a 5-minute development, inside of this area right here, using this as sell side liquidity, this as our bullish P array, if it would drop to, let's say, 15-second time frame, this whole development right here would become another market maker buy model, exact type of development what we are seeing right here. So if this whole formation here is 5 minutes, but we would zoom in to, let's say, 5-second type of development, this is where you likely would see a whole market maker buy model type of a situation right here. This again being the A point, D point, and this being the C expansion. Price running some sell side liquidity into bullish P arrays, into the catalyst area, and continues pushing higher. So this is why it's so important to understand that price is fractal and what's a pullback on the higher time frame. Then we zoom in and we have a clear high probability P array, and price starts keying off of that. We have clear order flow, clear buy side liquidity pools. This is when we get those smaller fractals towards that area. So obviously, as we are talking about time frames that we actually trade, we are not going to talk about 5-second and 50-second type of developments, but I just simply wanted to highlight this fact that price is fractal. And even if, again, this whole formation being 5-minute type of formation, if we have a key bullish P array, this could become original consolidation, this key area, and we are looking for long positions inside of this leg right here on the 5-second time frame. This triangle form right here would become a 5, 10, 15-second type of a market maker buy model. So always remember that inside one bigger market maker model, you always have smaller market maker models inside of that buy side of the curve. And now what I'm talking about here, if we would divide this whole formation, what we are seeing right here is sell side of the curve, price is building sell side of the curve towards the key area, the catalyst lower time frame P array, and what we have after we get a shift in delivery, this is when we get a buy side of the curve. So obviously on the market maker buy model, we want to focus on the buy side of the curve, looking for long positions, trading towards the external buy side liquidity, which is our original consolidation, and of course pushing towards our main magnetic area, whatever it is. Maybe it's previous day's highs, maybe it's previous week's highs and stuff like that. Now, looking to the right side, the ideal formation, again, not always we will have this type of development. The ideal type of formation when we are seeing this whole pullback right here on 1 hour or 15 minutes, that's ideally when we just have a simple one candle. So this is how the 4-hour candle we usually look like when forming a sell side of the curve when it comes to this execution time frame market maker buy model. Price will give this bearish push into this lower time frame catalyst area, bullish P3 right here. Then it will start reacting to this level right here, pushing the body of the candle to the upside. This is where we have this stage 2 right here when it comes to the 4-hour candle. Price starts leaving this wick, and this is where the shift in delivery happens. So the ideal type of formation is when we are able to position ourselves inside of the 4-hour candle's wick. So either with this trade right here or with this entry right here, either focusing on the original consolidation or of course pushing towards main magnet area right here, looking to take powerhouse at original consolidation. So this is when we position ourselves right on the wick right here of this 4-hour candle. So this is how it's looking like, and this is how this whole development would take place on your side when it comes to this 4-hour development. When we are entering on this execution time frame market maker buy model, price would start pushing and eventually you would see it explode to the upside, taking out your targets, original consolidation, and pushing towards the main drawn liquidity. And this is how your entry that you entered on the execution time frame market maker buy model fractal here would look like on the 4-hour candle where here you entered right in the wick while price was rejecting this bullish lower time frame P3, starting this execution time frame market maker buy model. The stage 3 right here is the expansion stage, and sometimes 4-hour candle closes right here and gives that stage 3 expansion in the separate candle, but very often it's just one candle, just that I divided it in 3 stages: price pulling back, reacting, and giving a shift in delivery here on execution timeframes, starting the order flow towards the original consolidation and the main drawn liquidity, and then just simply expanding and taking off to the upside. So this type of an entry right here, a more conservative one, if we align it right here, that entry would be, as you can see, a little bit higher on the 4-hour wick. But this is again where you place yourself in the manipulation stage, in the stage where the way happens, her price runs sell side liquidity both on the execution timeframes and on the lower timeframes right here into bullish P3, then starts stalling, gives a shift in delivery on the execution timeframes, starts building this bullish order flow, and this is where you start seeing this 4-hour candle lick form, pushing towards main draws of liquidity and main targets. So these are the core foundational rules, core foundational structures, what's taking place on all of these lower timeframes and execution timeframes, what you need to look for, and how those really high probability entries happen. So that is all for this one. I hope you enjoyed it. I hope it was insightful, and we will talk very soon. Take care, guys.